Hi everyone, I am William. Welcome to this channel and being here today. Before I begin, please feel free to subscribe to this channel and on the notification button. Also, please watch this e-learning video until the end, as it is imperative for us in order to achieve the 4,000 watching hours. Today, we are going to dissect the anatomy of an anti-bribery and corruption audit. In a world where a single corrupt payment can destroy a decade of reputation building, the ABC audit is no longer a nice-to-have. It is a strategic imperative. Over the next couple of minutes, we will move beyond generic compliance checklists. We will look at how to audit for actual risk. We will cover three main areas. First, understanding the regulatory landscape and the tone at the top. Second, the technical audit procedures for high-risk areas like third parties and gifts. And third, forensic data analysis techniques to detect hidden corruption. Let us start with the obvious question. Why is this audit so difficult? Because bribery is a covert transaction. It doesn't leave a general ledger code labeled bribe. It hides in consulting fees, travel expenses, discounts, and shell companies. Therefore, as auditors, we must stop acting like bookkeepers and start acting like detectives. The legal backdrop is severe. The U.S. Foreign Corrupt Practices Act, the U.K. Bribery Act, and local statutes worldwide share a common thread. Liability can attach not just for the company's actions, but for its third parties and even its lack of adequate procedures. So the audit question shifts from, did we pay a bribe, to, do we have reasonable assurance that no one is paying a bribe for us? To set the stage, we need to understand the corruption risk landscape. High-risk zones include interactions with government officials, obtaining licenses or permits, customs and tax regimes, and winning public sector tenders. If your company operates in any of these areas, the audit scope must widen significantly. Let's begin the audit process. Phase 1. Planning and risk assessment. Do not walk into this audit blindly. Review prior whistleblower complaints, external legal findings, and the countries you operate in. Use Transparency International's Corruption Perceptions Index as a geographic risk map. If you are auditing a subsidiary in a high-risk jurisdiction, you will need to spend more time there than in a low-risk one. Plan accordingly. We now move to testing the control environment. This is the soft tissue of the audit, but it is the most critical. If management tolerates facilitation payments or aggressive sales tactics, your transactional testing will find nothing because the corruption is normalized. Interview senior management. Ask them a difficult question. If we had to choose between losing a contract and paying an irregular commission, what would you do? Listen for hesitation. A strong control environment has a documented, board-approved anti-bribery policy, but you need to check if it's a living document or a PDF gathering dust on the intranet. Review the whistleblowing hotline data. Look for trends. Are there reports regarding a specific region or a specific agent? If you see 0 reports over 3 years in a high-risk country, that is a red flag. It usually indicates a lack of trust in the reporting mechanism, not a lack of violations. Next, examine due diligence procedures. I want you to pull the files for the top 5 third-party agents in high-risk countries. Does the file contain a beneficial ownership search? Was an anti-bribery clause included in the contract? Was there an approval signature from the compliance officer or just the sales director? If sales approved their own agent without compliance review, your control environment has failed. Finally, look at training. But do not count the number of modules clicked. Sample employees in procurement and sales. Ask them, you are at a port and a customs official asks for $50 to release the goods immediately. What do you do? If the employee says pay it, the training has failed. Document this as a significant deficiency in the control environment. Let me pause here. A note on facilitation payments. If your company is subject to the UK Bribery Act, these are illegal, full stop. If subject to the FCPA, there is a narrow exception, but best practice is to ban them entirely. Your audit report should explicitly state whether the company allows these payments and, if so, how they are tracked. If they are tracked as miscellaneous expenses, that is a finding. Let us get into the mechanics of testing. We start with gifts, travel, and entertainment, or GTE. This is the most common vehicle for bribery because it sits in a gray zone. A coffee is a gift. A first-class flight to Paris for a government regulator's spouse is a bribe. Your audit procedure: request the full GTE log for the year. Sort it by the highest monetary value and by the highest frequency to the same recipient. Using data analytics, flag any instance where a gift was given to a public official. The company should have a specific approval workflow for this. If they don't, that is a finding. Test the approval matrix. For example, if the policy says gifts over $200 require C-suite approval, sample a transaction of $250. Does the approval exist? Is it dated before the expense occurred? If the approval came 3 days after the lunch, the control failed. Retrospective approvals are no approvals. Pay special attention to travel expenses for government officials. Did the company pay for a regulator to visit a factory? That might be legitimate. Did the company pay for the regulator's hotel minibar, golf fees, and spa treatments? That is likely a violation of most laws. You must check the itemized receipts, not just the total. Here is a forensic trick. Cross-reference the GTE log with the contract award date. Take a sample of contracts won by government entities. Map the date of the contract signature. Then look backwards 60 to 90 days. Was there an unusually expensive lunch or a training seminar at a resort just before the award? This is called temporal correlation, and it is a classic red flag for quid pro quo. If you find these patterns, do not accuse immediately. Instead, ask management for the business rationale. Why did we take the procurement officer to the Super Bowl 3 days before signing? If the rationale is vague or missing, you have a finding for potential corruption risk. Documented objectively. We now reach the highest risk area of any ABC audit: third-party intermediaries. This includes agents, distributors, consultants, and brokers. Why are they high risk? Because companies pay them money to pass it along to government officials, creating deniability. The U.S. Department of Justice calls this the third-party problem. Step 1. Inventory all third parties classified as high risk. Usually, this means agents paid on commission who interact with public bodies. For this population, request the due diligence file. Does it include a sanction screening? Does it include a media search? Does it identify the ultimate beneficial owner? If the agent refuses to disclose the owner, terminate the relationship. If your company hasn't terminated it, that is a critical finding. Step 2. Contractual review. Read the actual agency agreement. Is the scope of services defined? Vague terms like assist in obtaining permits or facilitate business development are dangerous. A proper contract describes specific, legitimate services, market research, translation, or logistics. If the contract is blank, assume the service is influence peddling. Step 3. The financial test. This is where you follow the money. Review invoices from the agent. Do the invoices align with the contract scope? For example, if the contract is for translation, does the invoice list hours of translation work? Or is it a flat success fee of 30% upon winning a government tender? A success fee tied to a government contract is presumptively corrupt under many global regulations. Trace the payment. Where is the money sent? Is it going to the agent's corporate account in the same country? Or is it going to an offshore account in the Cayman Islands? Or worse, is it being split and sent to a third party you have never heard of? You must request the bank statement trace for high-risk payments. If the finance department refuses to provide this, escalate immediately. Finally, perform the substance over form test. Ask the local country manager, have you ever met this agent in person? Do they have an office? If the manager says no, but they get things done, You have identified a shell agent used for bribes. This is a reportable finding. Do not let the business explain it away as cultural. Let us shift to quantitative analysis. We cannot interview everyone, but we can interrogate the data. You need to run specific data analytics on the general ledger. This is where we catch the bribe that is hiding in plain sight. Run a test called round dollar thresholds. Bribes are often just under the approval limit. If your policy requires manager approval for expenses over $5,000, run a query for invoices of $4,999 or $4,950. A cluster of payments just below the approval limit is a classic indicator of control circumvention. Next, test for split purchasing. This is when one large bribe is broken into many small payments to different vendors to avoid detection. Analyze payments to a single contractor or agent over a short period. If a vendor received 10 separate payments of $2,000 each in 1 month, that is economically irrational. It suggests concealment. Run a Benford's law analysis on the accounts payable ledger. This mathematical law predicts the expected frequency of leading digits in natural numbers. Human-invented fraudulent numbers tend to start with 5, 6, or 7 more often than nature allows. If your consulting fees ledger deviates significantly from Benford's distribution, you have statistically identified a population for manual review. Also, look for duplicate payments to the same vendor for the same amount on the same date. While often a system error, it can also be a method to accidentally overpay a bribe. Check the approval notes. If they say, reprocess due to error, but the error was never corrected, investigate. Finally, the ghost vendor test. Create a list of all active vendors. Cross-reference that list against the employee directory. Pay specific attention to vendors with the same address, phone number, or bank account as an employee. If a procurement manager has approved a vendor that lives at their home address, you have found either fraud or bribery. Escalate to legal immediately. We have completed the testing. Now, we must write the report. This is where many ABC audits fail. They list the issues, but fail to diagnose why the controls allowed the issue to exist. You must perform a root cause analysis. For every finding, ask why 3 times. Example: we found 20 invoices just below the approval threshold. Why? Because the system doesn't block split purchases. Why? Because IT was never told the requirement. Why? Because the policy was updated, but the system configuration was not funded. The root cause is not fraud. It is a governance gap between policy and IT implementation. Structure your report with 3 layers of findings. Layer 1, specific violations. Employee A accepted a gift worth $500. Layer 2, control failures. The approval matrix was not enforced. Layer 3, systemic weaknesses. The company lacks a real-time expense monitoring tool. The audit committee needs to see Layer 3. Your recommendations must be SMART, specific, measurable, achievable, relevant, and time-bound. Do not say, improve due diligence. Say, by Q3, implement a third-party risk management system requiring beneficial ownership disclosure for all high-risk agents with sign-off by the Chief Compliance Officer. Be prepared for resistance. The business will argue that your findings are technical violations with no actual corruption. Your response: an ABC audit does not require proof of bribery. It requires proof of inadequate procedures to prevent bribery. Under the UK Bribery Act, the corporate offense is the lack of procedure. Remind them of this distinction. Finally, the exit conference. Do not surprise management. Walk them through the data analytics and the third-party contract reviews. Focus on the systemic root causes. If you have evidence of a potential illegal payment to a government official, your reporting path changes. That is not an audit finding. That is a legal disclosure. You should stop the meeting and contact the General Counsel immediately. We are in the final stretch. Let's summarize the key takeaways for auditing anti-bribery and corruption. First, remember the detective mindset. You are looking for the absence of controls, not just the presence of policies. If management has a zero-tolerance policy but approves facilitation payments in practice, the control environment is toxic. Second, follow the risk. Spend 80% of your audit time on third-party agents, government interactions, and GTE. Do not waste time auditing low-risk routine vendor payments for office supplies. Prioritize based on geography and industry. Third, use data analytics. Benford's law, round-dollar clustering, and temporal correlation are your forensic friends. They turn 1 million rows of data into a manageable list of red flags. Fourth, document your root cause. Do not just count the errors. Explain why the system allowed the error. That is the only way to drive real remediation. And finally, remember your duty. Bribery destroys fair markets and harms societies. A robust ABC audit protects the company from fines, but more importantly, it protects the integrity of the global business environment. Thank you for your time and attention. This concludes my sharing today. If you found this e-learning is useful, please do subscribe to this channel and share it out with your friends and colleagues. Thank you, and have a great day ahead.